turning the Casper SMC everyday trading strategy into an automated strategy with TradersPost. Can we do it in under an hour here? Let's see. Coming up on today's Blueprint.
Hello, mon frère.
Welcome to Blueprint for May 29th, 2025. I'm one of your hosts, Tom Hartman, marketing manager here at TradersPost, alongside Peter Hartman, also part of the marketing team. Look, we are on a journey to basically automate the entire retail trading space on the internet, on YouTube. And today's victim is Casper SMC, a YouTuber online who just posted the other day, Peter, a trading strategy, like an ICT-based trading strategy that I thought looked interesting enough in order to try to automate. I hope he'll be happy about it. I mean, bring in visibility to him and his followers and viewers. So I think it should be fun. Have you been liking the series, Peter? Just turning YouTube videos into full-on strategies?
Yeah, I think this is actually very interesting. For today's, I'm wondering, I've heard ICT mentioned before. What is that?
Insane clown tossy. No, it's ICT. I forget what it is. ICT trading.
I heard it
SMC,
in
smart money contract. Inner Circle Trading. Inner Circle Trader. That's the name of the guy who's popularized a number of these series of basically created these tools, these patterns that people can recognize within the market. Stuff like fair value gaps, order blocks, change of characters, break of structures, a bunch of different things that people now are familiar with. So when they see these sort of patterns, they can go ahead and trade them. It's sort of like in stand-up comedy where you have there's like 10 or 15 types of jokes, and when you see a thing come in, oh, it's gonna be a left turn, it's gonna be an exaggeration, it's gonna be a return to normal, it's gonna be a parallel analogy, it's gonna be a hyperbole.
I don't think the regular population thinks about that when they watch stand-up comedy.
Well, I was just trying to explain it to you. The regular population who's watching this, they all know retail trading stuff, they all know that sort of thing. To you, it's completely brand new. You're just like a little baby bird who doesn't really know anything. So I'm trying to spoon-feed it to you in a way that you can understand.
Well, I appreciate it.
If I talk to you about Stan Druckenmiller, you don't understand it. But if I talk to you about Nate Bargatze, Pete Holmes, maybe you might be able to get it.
Well, I appreciate it, Tom.
If that sounded insulting, Peter, I meant it that way. That's the way it's supposed to be. All right. So this week we are going to be doing the video I was talking about, the one from Casper SMC. Let's try to do something a little bit different here. We're doing it like basically straight from scratch, and we're going to be using a little bit of AI, but in the writing of it. But we're not going to do the thing that we did last week where we give it the whole transcript and it has to figure it out for itself. I want to do something a little bit more granular here, where we do some manual, but with a little bit of an AI thing on the back end. Sound fun?
Sounds like fun.
You speak when spoken to, Peter. All right. You have
Look,
10 jobs. All right. And one of them
cool,
is making sure that you're paying attention to me. You make me feel good.
If you're going to be cool, I'm going to be cool.
Nice. All right. So let's go ahead and take a look at this video. We're going to start basically partway through where he starts explaining what the strategy is. And he's given loose guidelines here to the setup. He goes, this is sort of like the setup you're looking for, the pattern you're looking for. And as we go along and watch this, let's try to go ahead and create it.
Do you want to watch? Wait, hang on. Before we get to the video, are we putting the video full screen, or what do you want to do there?
Yeah, put it full screen.
All right.
And this goes hand in hand with what one of my biggest mentors told me. And that is that only once everyone is wrong will the market move correctly. So with this 30-minute candle, we've identified that the majority of traders are getting active in this time of the day. And if we know that this is the most amount of selling and this is the most amount of buying, or the lowest point of buying and the highest point of selling, well, guess what happens if the market goes to one of these areas? Well, everybody on that side of the market is now wrong. And most of them are going to be stopped out of their positions. So what's going to happen if the market moves under one of these levels is that there's going to be a lot of liquidity. Now, all this means is that anyone who bought in this candle, most of them are going to have their stop losses right here. And if we've identified that most retail traders are going to be trading in this first 30 minutes, then right here is where they're going to get stopped out of the market. Let's just think of this from the perspective of.
So the idea over here, just to make sure it's clear, he's talking about the 30-minute candle, the first 30-minute candle at 9:30 in the morning, where we get a bunch of volume, get a bunch of movements. There's a clustering of orders that are there. And so the idea here is that the high of that 30-minute candle and the low of the 30-minute candle is defining a particular type of range, an opening range that you can then deal with. So he's gonna outline here, hey, those top and bottom ranges, this is the sort of like movement that we're looking for, setup that we're looking for in order to take a trade.
Of a market maker. If you're in a market and you want to take a big position to make the market go up, where are you going to be able to enter that position? Well, let's just say you have 1,000 contracts you want to buy, and there's only, I don't know, 100 in this range. There's not that many for sale. What are you going to do? You're going to push price to where all of the masses are fearful and they get stopped out of their trades. That way you can buy the market from them, and then you can make the market move up. So whenever a lot of liquidity is available, the market is going to be forced to show you its hand. And the reason for this is because this is when big traders can get involved. Now, you and I have the luxury of being able to buy or to sell wherever we want. But these guys, the big traders, they have to buy where there is liquidity. So it's our job as traders to identify where the most amounts of liquidity are. That way we can see how the market responds to it. Now, in order.
So this is an idea here that comes up a lot or that's like the core underpinning of ICT from what I understand. And the idea here is that you want to place your trades in favor of what institutional players or big whales are doing, right? So if you're on an asset and someone is buying, $3 billion worth of futures that day, well, they can't buy it all at once, right? They can't just necessarily just press the button and just buy it all at once. They're going to be eaten up by slippage. They're going to end up paying way more for the average price for their position than they would if they scale into that position. And so the idea is that there are market participants that are moving the market in such a way as to get people offside, to get the price at a level that's more favorable to them, so that then when they scale into that position, they're able to get a better fill price. Peter, did you ever see that video from Jim Cramer from some years ago, where he's like admitted on camera that, oh yeah, he would whatever the hedge fund he worked at would manipulate prices so that they could get better entries and then flush people out, and they would just rinse and repeat. And he was laughing at how retail traders didn't know anything and it was so easy just to fleece them.
Allegedly.
Well, no, the video is definitely true, but this is it's a Jim Cramer video from years ago.
I have seen it.
I thought you might
have seen it. No, I did. You showed it to me. Of course, I saw it. You were outraged.
right. So that's the idea over here. So that you're defining these liquidity levels, and let's see what a setup is.
And repeatable pattern that helps you enter trades, place your stop loss, and your target. And to do this, we're going to go to our 5-minute chart. All right, so now we're on the 5-minute time frame. The next thing we want to wait for is either the high or the low to be hit. So we want to see price trade into one of these levels before even thinking about a trade entry. And as you can see in this example, we hit the low rather quickly. Now, just because we hit the low and rebounded a little bit doesn't mean we're quite ready for a trade. What we want to wait for is a fair value gap to form back into the first candle's range. Now, if you're not aware of what a fair value gap is, all it is a very simple 3-candle formation where the middle candle is very.
All right, let's set this up first. So what we want to be doing here is we want to be able to define the first 30 minutes of activity for, let's do this on the NASDAQ. And so we want to define the first levels of volatility, and we're going to do this a semi-discretionary trade. So basically, instead of have it all calculated automatically, I want to set it up here that actually, should I do it all automatically or part by hand? Okay, let's just do it automatically. So over here, we're going to be doing the first 30 minutes of the day. So on the left side over here, you're seeing the extended hours, and then the day starts here at 9:30. And so we'll take the high and low of that period. So let's go ahead here. We're going to say There's two different ways we can do it. We can actually just cut. He actually dropped down to what candle? What was it? The 5 minute? Yeah, I think it was the 5 minute. So let's go ahead with. We have two choices. We can either use request.security in order to pull the 30-minute candle and grab the high and low, or we can calculate it ourselves. So let's just go ahead with the pull on the high and low from the request.security. So request.security, that will give us for this ticker will be the 30-minute, and we want to get a 2 pull that is the high and low of that candle. We want to return that as our open in range high and our open in range low. Okay, so if we do that and then we plot that, so let's say if the bar that we're on right now, if bar state is first bar of regular session, is first regular, where is it? Is first bar regular. So if we're on the first bar of the regular session, let me just make sure the regular session here is what I expect it to be. So let's just color the first bar blue, the background, simple, stupid, simple, proven. Add this to the chart. Okay, we're seeing here that it's actually showing up here at 6 p.m. That's not what I want. 6 p.m. is not what I want. First bar, regular session. Am I in the right time zone? I am. American New York. Let's see here, and let's do first bar. Let's do is.
What are we doing here?
I'm trying to find the first bar over here. The first bar should be over here at 9:30. For some reason, I'm getting the 6 o'clock. Oh, right, because that's when futures open. Let's do it in a different way. Let's do. Let's do the trading session. So we're gonna get the session here. We're gonna say the session is input session is gonna be from 9:30 to 4 or whatever, the first 30 minutes. So 10:30. You know what? I don't like doing this way.
Me either. Whatever we're doing, I don't like doing it this way.
If the hour is equal to 9. If the hour is equal to 9 and minute is equal to 30. All right, we're getting the time zone for there is different. So let's do hour and for our time zone. Our time zone is, what is it, America? New York? Minute, time. Peter, you know, doing this by hand feels like doing long division by hand. Like, no. The time for doing manual long division is long gone. Hundreds and hundreds and hundreds of those we have to do when we were kids in order to understand the concept. I understand the concept. Give me the calculator. Now that we have AI, doing things by hand feels like, what are we doing here? Well, it's like if Google went away and I had to use Yahoo directories in order to find websites, I'd be like, excuse me, no. We got past this. Anyways, okay. So the first bar over here, we're just going to choose the.
You got to learn how to do it properly before you can rely on technology. No. I don't know how my car works. I just drive it. All right. So here is first bar. Let's say. So now we know that the blue market is showing up at 9:30. I have to pass my time zone because the time zone of the CME, I believe, is 1 hour back. And so when I was checking for 9:30 specific
specifically, it was off by 1 hour. If I pass my time zone over here, I don't have to worry about that. So there I have my 930. And we want to be able to calculate. We want to be able to basically draw the top and bottom, the high and low for that 30-minute candle. So we're going to create a variable over here, and the first one will be high, open high line, let's call it.
Is this like a
And
scalping
this will
thing?
be a line object. It doesn't have to be a scalp. It can be a scalp.
Or
But
sniping?
you can turn this into a trend fault. No, this is more like because when you're doing with sniping, let's say you have this moving average. What happens is that the price hits that moving average, and you expect it to bounce a certain amount. So the idea here is that on that bounce, boom, you're grabbing some, you're getting in at that line, and then you're taking a little bit of profit at the top. For scalping. For sniping is there's an event that happens, some big volatility spike or whatever, and for some reason a bunch of liquidity enters in or exit from the market, and you're not expecting this to stay at all. You're expecting the mean to revert. So you're just like either shorting that pop or going long the short in order to get a quick move, a rebound. That's more of a snipe. So the snipe is a guy pops his head out and boom, you're taking the shot.
I see. So this
Does that
is
make sense
not
to you?
this is not either one of those. This is just, I guess, its own thing.
This is trying to determine the trend. The ICT, the smart money concepts idea, is that if there is institutional buying, and this is what the guy in the video is going to be like walking through, that the day starts and now they have to get into their position. But because they have such a larger position than you have, you can follow in their wake. And as they're buying, buy behind them, because they're going to be moving the price up because they're buying more than you are. So you might be buying one contract for NQ, but they're buying 100. So they're going to be moving that price, and you can make that. You can get in at the beginning, and by the time they're ending their buying, you can sell off. So you're just in their wake.
Got it. Thanks.
All right. So the first line will be, we're passing any values because it doesn't actually have to be plotted. For the open high, open low, we're passing this to, we're defining these as static variables, so VAR, so that those lines will never change. So they're not being redefined on every bar. But here, if we are on the first bar, actually I don't want the first bar, right? If bar state is closed, let's say here. So what we want is, as soon as that 30-minute is done, a 30-minute time frame. So if time frame change on the 30-minute, so this event is happening did I get something wrong here? Okay, so now I'm coloring the bar every 30 minutes. So you can see that every 30 minutes an event is happening. So after the first 30 minutes, we want to go ahead and grab what the high and low is. So if this first bar has happened, so if is time frame change 30 minutes. The issue here, 30 minutes, and let's do this. Pass those as NA. If this high is NA, and so not available if there's nothing actually in it. So here the open high, the high level and low level lines will be nothing, will be empty here. So if this is true and the first 30 minutes has happened, let's go ahead and make that first line new. We'll start at the bar that we're on, and we'll extend that to the right. So it'll be the bar that we're on. It'll be the open high. And we'll extend that to, sorry, go ahead.
Did you want to play some of that video while you're doing this, and then you can explain the last 3 lines or whatever that you're writing? Or is there any value in seeing this video?
No, let's just do this. Yeah, let's see if we can do this. This would be valuable here.
Gotcha.
So bar index, extend to the right. Color will be, let's call it blue. Style solid with 1. And force over nothing. Okay, so we have that. We have the low. Okay, so the idea here is that it's going to switch, but that's going to happen on the first bar of our chart. So as soon as the chart starts, that's going to happen the first time. And then we need to be able to reset these guys to nothing when the session is over. So over here, we're going to say, if, we'll just use the variable we saw before. If is first bar regular, then these guys will reset. All right, let's see how this works. Okay, so now we have a bunch of lines. All right, this is happening because the lines are happening on every first 30-minute bar of the day. So let's go ahead and delete you. So
why are they horizontal? It's a horizontal line on each one of the bars?
correct.
Huh.
All right, so here we have it's switching, but we only want that to happen on the first bar. So let's do that. If okay, so now we have our top line over here. So this is the high. This is the low. The reason I don't want to have this, my problem is that I want to get here. This is the first 30 minutes, 9:30 to 10. I want this whole range down here, but I'm getting the wrong time over here. Oh, you know what I'll do? We'll do it in here. So let's get, what we'll do here. Okay, let me play the video while we do this.
With a lot of force. Now at this time, you can enter the trade as soon as this candle closes and confirms that fair value gap, and you would put your stop loss at the candle bodies. Now for a target, we're going to put a fixed to our target, but I'm going to show you how to get even higher risk reward later in the video, because this is the first of many trades we're going to test. We're going to test this over the last few weeks of price action, not to prove it's perfect, but to prove that it's real, and more importantly, to give you guys the confidence you need to trade this profitably. So at this time, you would enter a long because we hit the low and we reversed up to the upside, showing intention to go higher. So you would hit buy, then you would put your stop loss underneath the candle bodies, not the wicks. Okay, you'd put it under the lowest candle body. And then for the target, you would just put a fixed 2R. And as you can see on this trade, we would make about $2,600, and we're risking about $1,300, which is a good risk to reward. Now let's see how this trade plays out. As we can see, the trade moves pretty aggressively, has a little bit of a pullback, but that's okay, and it ends up hitting our target. Now let's move to the next trading day. So as you can see right here, this is the 9:30 a.m. candle. You're going to mark out the high and the low, and then we're going to go down to the 5-minute chart. And all we got to do is wait for one of these levels to get hit. Yes, it is that stupid simple. So as we can see here, the market ends up trading into it. But remember, trading into it's not enough. We need a displacement back into the range. Now, in the last setup, I showed you guys using a fair value gap. And in this setup, I'm going to show you guys something called a smart money push. Now, notice right here, we have this little sequence of up candles. So we have a blue candle, a blue candle. So this is an up move. Consider this all one move. Once we engulf that up move, meaning a candle body closes below it, that as well tells us that we're displacing back into the range. So at this time, just like a fair value gap tells us that the market is being sold off at this high probability area, this also tells us that and we can enter a trade at the same time. So we would put our stop loss for a short above the highest candle body, and we would take this and we would just target 2-to-1 risk to reward. So as soon as either a engulfing of a series of candles.
All right. I'm not liking the way that I'm thinking about this here. So let's do this in a different way.
I was thinking
let's
the
go
same
ahead
thing.
and ask AI. So let's call this simple strat.
What are we doing now?
Yeah. So let's just do this. One thing I like to do. 1 second here.
You're calling an audible. Sorry, Tom. That's a sports term. It means when you offside the puck in
I don't
a
respect
net
people
basket.
who listen to sports, so you can just go ahead and take that back. I don't respect people who do sports. All right. So here we're gonna do create a Pine script 6 where horizontal lines are placed at the highest value of the opening range from 9:30 to 10:30.
Create a Pine script V6 where horizontal lines are placed at the highest value of the opening range from 9:30 to 10:30 and the lowest value.
All right, let's see if you give us. See, this is way more. Well, let's take a look. Is new day, time for TA change, due month. See, I did not like this.
We should get some music to play during Blueprint while you're doing this.
Yeah,
Some
yeah.
cool.
This, I don't want to do it this way. Let's do it this way. I actually have a script for this. Why don't I have a script for this? I have one. No, I'm cheating, Peter. Freaking, I don't like that part. I don't like cheating. So here, let's just do it again. Let's do. Let's just track the high and low. So high, low, and high will be equal to the highest value between high and high, and low will equal to the lowest value between low and low. All right. Oh, this is what I wanted to do. If you do this in cursor, it does the whole autocomplete thing. That's pretty fun. All right, so high, low, and then we want to plot the high. Color blue. Thickness 1. Low. All right, let's see this. Plot value, title, color line width. Okay.
I watch people play video games. This is very similar.
Let's add the chart. Why am I not seeing any value? High, low, high, low. Because this needs to be set to high, low, Tommy. Okay, now we're getting a high, low, and we need that to reset at the beginning of the day. So let's get that. If session first. Oh no, is regular. That's what I need to do. Is first regular. Let's see here. That was bringing me over here to 630. Is market. Is market. Okay, so that's all the time. That's not going to work. I'm just trying to find a current state variable that's the first bar after we get out of extended. So is session regular? Let's see if this is the one. Oh, that's a constant. Okay, this is what we'll do. Let's get out of extended session into the regular hours and do it that way. Is first. And now we're getting, there we go, 930, first bar. Perfect. So when that first bar happens, we want the high to be reset to high and the low to be reset to low. There we go.
All
So
right, do you
the
want to
high
do a
and low,
temperature
and
check?
we want that to stop. One more time.
You want to do a temperature check? Let us know where you're at, what's
Sure.
going on.
Yeah, so right now I just switched from the extended hours to the regular hours. I just realized I don't even need the extended hours. So we don't have to try to figure out if it's regular hours or not. Here I'm in the regular hour chart. So the first bar over here, which is going to be the is first bar regular, will be that 930 bar at the beginning. We don't have to check the time. We don't have to check the minute or anything like that. So we have the high and low that's happening. But we want to make sure that we only want the first 30 minutes here, right?
Right.
We want the first 30 minutes until from 9:30 to 10 o'clock. So then we'll say what we'll do is if the what is it? If time frame change for the 30-minute, if the time frame changes afterwards, we want to go and it's not the first bar, then we want to say stop. Let's say stop update or update false. And we're going to pass an update false up here. We're going to create one, update true. All right, so if that's true, if this is the first bar of this session and update is equal to true, then we go ahead and do that. If it changes, false, so then it shouldn't update anymore. Does that make sense to you here, Peter? We only want to update the high and low if we're allowed to update, if we're in that first 30-minute period. If we're not in that first 30-minute period, we don't want to keep updating the high and low because we want that to stop. So if this is true, it'll go ahead and update. And as soon as we get to the first time frame change, the 30 minutes, and it's not this first bar over here, this update will switch to false, and then it'll be false throughout. And then when we get the first bar again, update should be true. Let's see if I got this right. Okay, so we have our high here. That's the high. That's what we're expecting. And we have the low here from this is the 9:45 to 10 o'clock candle. So that's the low over here. Does that make sense here, Peter? We have here the high. Peter?
Yep, I see it. I see the high.
Low.
Yeah.
So that's the high and low of the first 30 minutes. If we were to look at the previous day, this would have been the high and the low of the first 30 minutes.
So it's those blue lines that are indicating that, right?
Correct, exactly. So now that we have those blue lines that are set up, now we have those values, our values here on the right, we have those values that we can check to see if we're crossing or not.
Nice.
All right, so here in the script, he was detecting, hey, are we crossing the high or are we crossing the low? So now that we have that set up, let's just copy that back into AI. And what we'll say here is we're trying to detect a cross. So high cross. If cross over the high, oh, I love that autocomplete. So
Is there
here,
no
if we're crossing over the
autocomplete
high, we would that
in TradingView?
not this is AI autocomplete. No, it's trying to figure out what I want to write next. So here it did the high cross, the low cross under. If so, let's just draw a dot. If high cross, we'll just draw a label. Label new at the current bar index at the price of the high cross. I will make that a blue dot. Do the same thing for low cross, add that value. And the style will be circle. Let's do style, circle. Come on, you. Circle. Okay. Was it not style circle? Or is it label? Yeah, label dot style. One of the things I haven't done here, but I often do in other ones, is that I actually would have my other scripts on the side. And that way the code base, the AI has the context for all the other scripts I've ever written. And then it learns basically by the way that I write how I want things to be written. And learns rules and stuff like that as well. Style. Is it style underscore circle? Yeah, style underscore circle. All right, color. Label. 1 second here. XY text color style. Okay, those guys are too big. Let's change your size to 10.
So contrary to other blueprints, this seems to be going fairly well.
Nice jab at me, Peter.
Hey, look,
Nice jab.
look. Come on. Sometimes you experiment and it works out. Sometimes it doesn't. It's part of the fun. But this one, I got to say, doesn't look like you're sweating it too much. It looks like it's coming together pretty well.
All right, so we want the cross over here. We don't actually need the level showing at this bar cross over here. So here when it's first bar regular, I don't actually want you to show up. This first bar regular is here. If the previous one, let's do that. No. Basically, this you see how it's doing this. It's connecting the previous session to the new one. I hate that.
Yeah,
we don't actually want that value there. So what we're going to say is we're going to change you to style step with break. So it'll allow for breaks. And we want this first bar regular to be NA. That means we only want you plotted. Oh, you know what we'll do? We'll say if it's last bar.
If you're just tuning in, we are automating Casper SMC Everyday Strategy. It's part of our series here on Blueprint, where we are, well, Tom is finding YouTube indicator strategies and, having a go at it. Do I understand all the ins and outs? No. Do I find it entertaining to watch? Absolutely. And for those of you out there who are traders, I bet you're looking at this and learning a bunch of stuff. Please feel free to go back and look at previous episodes of Blueprint. My favorite one is Flush and Buy Bitcoin. That's where Bitcoin is purchased when you flushed a toilet. Sounds strange, but it can open you up to a whole world of possibilities when it comes to automation and TradersPost, TradersPost.io. Check it out.
Speaking of which, So here, right before we have a word for our sponsors, I have these dots that are appearing. I just added a flag or a check over here to make sure that our update is false, because we don't want to detect any crosses of the high and low before that first 30 minutes is done. So it's only after that we want to do it. Here we're getting these crosses. It'll be easier to see if I click it here. And in a second, after we get back, we'll see what we'll do. We'll check to see the next step of how to decide where the trend is going to happen, and then enter a trade for there. We're actually not far from the end.
Awesome. All right.
A word from our sponsors.
Ask yourself this. Are you making trading harder than it needs to be? If you're trading manually or still coding just to connect to your broker, yeah, it's time to upgrade. TradersPost lets you automate trades using signals from tools like TradingView or TrendSpider, or even your own custom setup. It works with brokers like TradeStation, Tradeovate, Coinbase, and a bunch more. I've been using it myself, and getting started was smooth. The platform's clean, setup's quick, and once it's running, it just works. And when you're ready to scale, adding more strategies, plugging into prop firm accounts, or juggling multiple portfolios, TradersPost handles it. It's built to grow with you. Start your free trial at TradersPost.io. Trade smarter, automate your edge.
All righty. Well, you want to take a look?
Perfect. So let's just jump back to the YouTube video here. We're going to be detecting a fair value gap
between the first candle and the third candle's wick. This tells us that the market is moving with a lot of force. Now, at this time, you can enter the trade as soon as this candle closes and confirms that fair value gap, and you would put your stop loss at the candle bodies. Now, for a target, we're going to put a fixed to our target, but I'm going to show you how to get even higher risk reward.
Okay, so we'll do that. We'll detect a fair value gap, and if a fair value gap exists after the 30-minute session has been done, we'll go ahead and take a trade in the direction of that price. So a fair value gap is essentially saying that because there's a gap between the candle high and candle low between these two separated candles, that the market has moved more dramatically in one direction, indicating a bullish or a bearish propensity in that direction, and we want to take advantage of that move. So let's jump over here, and we'll say that if update is false, because update, again, this is when we're after the first 30 minutes. If update is false, and well, let's just check for fair value gap first. So we'll say a fair value gap exists if or a bullish fair value gap is if the low of the candle that we're on minus the high of the candle, not the candle we're on is 0, candle before us was 1, the candle before that, so 2. So if fair value gap, the low minus high is more than 0, that should be a fair value gap, right? That distance is more than 0, then it should be a fair value gap.
You have a typo.
Where? Low minus the high.
Isn't it fair value by B-U-Y?
No, a bullish. Sorry, BU for bullish, BE for bearish is what I'm writing.
Oh, I see.
And if the high now minus the, no, it should be the low from 2 bars back minus the high now is more than 0, then we consider that to be a bearish fair value gap. Let's go ahead and just draw that. So over here, if this is true, I often use BG color just as a shortcut.
As a shortcut for what?
Okay, so here, just to print something on the chart so I can see where to look for.
Oh, I see.
So over here, it's saying there's a fair value gap between here and here. Okay, that's a tiny gap. I'm not sure if you can see that there, Peter. This tiny gap over here. Between here and here.
No, not really.
Fair value gap between here and here. fair value gap. Okay, so it's showing our bullish fair value gaps. And if we want to see the bearish ones, let's go take a look on the other end. Bearish fair value gap. We have the low over here versus the low versus the high, and then the low versus the high. Wow, that is tiny. Okay, so let's just give ourselves a first. Let's just go ahead and say that this has to be a minimum height. Let's do something like that. This height has to be. We'll do settings. So input number of ticks. Let's do 10, and we'll call that min fair value gap height. Well, and then you have to be down here, and it'll be this times min tick. So a subminfo.min tick is the 1 tick value for the chart, and this should give us a better fair value gap. Okay, there we go. So we have here a better one. Okay, perfect. Let's just reset this. So that way, if we wanted, more significant movements, we can go ahead. Let's do 50. And there we go. We have significant fair value gaps. Does that make sense here, Peter? So here the gap is 97.
Mm-hmm.
That's the number of ticks between the low of the previous candle and the high of the current one. Okay, so we got our fair value gaps. And now we want to say if that fair value gap happens after the 30 minutes, so when the update is not true. So if the update is no longer true, which means we're in our period where we're looking for trades. If not update, we'll end. If not update and fair value gap is bullish, then we want to go ahead and set a trade up. So we want to set a trade that's going to be strategy.entry for buy, strategy long. We're going to enter at the close of that fair value gap, and our risk will define that. So we'll define our risk as number of ticks, just for ease sake. So risk, it'll be integer risk. We'll call it 25 ticks, and our reward will be a multiple of that. So let's call it 2 reward. And so our strategy exit for this order, for our buy order, will be the stop will be the close minus. Okay, so it's already there. That's why I love the autocorrect, Peter. So close minus the risk times the minimum ticks. So here we need this in the parentheses. Same thing over here. And then our profit will be reward times the minimum ticks from the close price up. Let's go ahead and do the same thing for our bearish. And now we have that. Let's see what this looks like. Oops, strategy. Got to change that to strategy, since now we're no longer in indicator territory. Okay, so we have that here. Let's see if it's what we expect. All right, so a sell is happening. Let's look for a buy. Oh, it doesn't matter. Let's look for a sell. All right, so our sell happens over here. We get a break of the, hey, where's my dots that I had before? Oh, right, I don't need them there. Okay, so, we want to make sure that the fair value gap is happening from within this area. So let's just change that to match what the guy was saying. We want the fair value gap to be in the area. So the bullish fair value gap and the current closing price is below or equal to or below high, and the close price is is less than high and above low. And then we want the opposite or the same thing for here. Price is. All right.
If you're wondering what the
time.
guy he's talking about is, it's I guess Casper SMC. I don't know what we call this guy. He had a video
Casper
called
SMC, that's right. Yeah.
his video. This ICT strategy works every day. Stupid, simple, and proven. So this is what we're basing it off of. I just wanted to give him more respect and calling him that guy. You know what I mean? You know what I mean?
All right. So we have here, let's find a good one. Where would be a good one? All right. So this is a sell that's happening. Did I get my thing wrong? Risk reward. If my update is happening and it's a fair value gap bearish, which it is over here, and the close value is below high and above low, but we are not. Oh, close value is here. We're not above low. The close is 21,376 and 50, 21,376 and 50, and that's below our low. So why are you doing that? This shouldn't happen. Let's see here. Let's put a blue background to see. Oh, it's happened on the candle before. Right. The candle before is right. Okay. So on strategies, it's useful to do process orders on close true as one of the attributes for the strategy call at the beginning. That way it happens on that specific bar. All right. So is this what we expect to happen? So over here, the sell happens here because the fair value gap is here. So the sell happens. And we want our take profit to be 2 times 25 ticks. So 2 times 25 ticks would be, that's too close. Let's do 5. It's still too close. Why are you so close? My stop for the sell should be, my stop should be above my closing value. And okay, let's just write the comments over here. 1 second. Let's see what's actually happened over here. So here we're going to do, I know we're going to end soon here, Peter, but I just want to do this. Comment loss. This will be a stop loss. And then comment profit will be a take profit. And then we want to do the same thing over here. Stop loss, take profit. Copy you all, paste you here. Yeah, it's seen that as a take profit. How's that possible? Strategy exit, sell. Take profit is close minus reward times minimum ticks. Let's see what you're actually being calculated at. So here we'll do, here, let's just do this so we can see it. So here we'll say in the trade section, we'll have a stop loss, float NA, var float take profit none. If strategy position is equal to 0, we'll reset you. Stop loss take profit NA. Inside of our trades over here, our entry will be our entry price, which we'll add here, entry price. This is fun, Peter. I like this.
My nights have been like this. Well, not with PineScript, but my nights have been similar to this.
All right, so it's replacing stop loss. We'll replace you with stop loss. See, just tabs, then it just like replaces everything. So over here, my stop loss has been replaced. Take profit over here. I'm going to do the same thing over here. So I should just be able to hit enter, tab, start typing, and just like that, it should be And you're not doing it. Okay, fine. You and you come down over here. Okay, so entry, close, stop loss, opposite of this one. Risk reward times. Our variables have been replaced. And now, why did I do that? Because here I can plot our entry price, stop loss, take profit. Let's make our entry price our chart color, the new chart foreground color at 90, style 90, style step line. Do the same thing for the next ones, but you will be color red at 100%. You'll be color green. Let's see what this looks like. Okay, it's seen it very close here. You see how the red and green are super close?
Yep.
Why are you super close? Are my tick size really that small?
Because you're on the wrong time scale.
What is that always the answer?
I don't, yeah, that's what I've heard from previous ones. I don't know.
So I have my risk up there. This makes sense. This is 250. Okay, that makes sense. Am I not doing times? Am I not doing times here, Peter? Ooh, we'll just give it another couple of minutes and we'll be done 5. I'm doing it wrong. I have something here wrong. So that means over here, I'm reward. Oh, so dumb. So dumb. That's over here. Risk, reward. Reward times risk. Reward times risk.
Correct.
We'll just put that out of the final version, Peter. There we go. Okay, so that's a little bit too high now. Too much risk. Let's put you down to 2. Hell, let's give you a 1. Let's lower our risk to 100. There,
I don't
green's a
mean
little bit
to-
better, Peter.
Yeah. Okay. I've got a little bit of OCD going on. Can you close that notification at the top right? Thank you.
Sure.
All right. What were you saying? What's your
All
Eureka?
right, so we
Did it
have
work?
so we have our stop loss over here. We have our take profit that's showing the fair value gap happens, and we get a win over here. We take a look at the sale over here. This all happened, but at the top. Okay, let's just go to the present. Let's see our trades here. Let's take a look at our trades. Here we have. Do we only have sell trades? Buy. No, we have buy trades. Let's take a look at the first one. All right, so fair value gap within the range, pop, win. All right, a couple of things. Yeah, so that happens there. So that's one section of his video. You can take a look at the other section. We don't have time right now, but he does go and takes a look at a different scenario where you're outside of the range and you head back into the range and you get a trade. There is one last thing I'm going to do over here, which is the most important part, which is show you how you can connect this to TradersPost, folks. That's what we're here for. Super simple, especially when you're using Cursor AI. We're going to head over here, and inside of our entry and exit functions, we want to be adding alert messages. So let's head to the top over here, and we're going to add alert message or message entry, and this will be a text area. Come on. Alerts. Message exit. This will be a short entry, but we need a. This is for long. Entry long. Let's get an entry short. Exit will be the same for both. Entry long, entry short. Exit. All right. And then that way we, in our messages over here, in our alert message, if we are entering the position, we want to do alert message long, alert message short, tab, alert message short. We'll do another one for the exit. In either case, we want the alert message to be exit. Perfect. That works for both. Let me just make sure that strategy exit works that way. Sometimes AI will suggest a thing that did not happen. Alert message. Yes, or alert message happens here. Perfect. I should mention, I do have extensions here for, I believe, autocomplete for Pine, if I'm not mistaken. Pine script. Yeah, so I have Pine script syntax highlighter extension and then Pine script version 5 that's installed that helps with the autocomplete within the system, just in case that wasn't clear before. No, I never actually mentioned it. Okay, so we have our alert message fields that are appearing there. So let's go ahead and save you.
You said it's called Pine Script Syntax Highlighter?
Correct.
All right, I just put that in the chat.
We have an error here. Text area, let's remove. So default text will be this. Title, grips. Title. Okay, we're also going to put in here alert message. Here, strategy alert message. Come on. 1 second here. I just want to put in this piece of text. I'll explain this in a second, Peter. So over here, where are you? This. Okay, so if I put in this comment to begin with at the top, then my alert message will automatically be replaced inside of the alert field. Let me see what's wrong here. This was giving me an error. What's the error? Okay, we save. Okay, great. That means over here, I have these alert boxes that I can put my TradersPost. Let's grab it from the strategy. So let's say I'm in strategy. In the backend of TradersPost, I'm going to create a new one called Casper SMC. No, let's call it simple strategy.
I think he called it stupid simple. I don't know.
Yeah, he did. We're going to use it for the futures class. We're going to save that. Let me connect that to my TradersPost paper broker. Change my name, auto submit because I want it to go through automatically. Switch this to bullish and bearish for the sides because I want long and short trades. I'm going to allow add to position. So position size, allow add to position so I can have multiple trades that are happening in case I have a position already for that day. I'm going to use all the other defaults, enable it. Then I can click on webhook at the top right, copy my webhook, come over back to TradingView, create an alert, choose the strategy that I created from the dropdown. In my message field, you'll notice here that placeholder that we placed at the beginning of this text, strategy.order.alert message, is already placed there. So that will automatically be replaced with any text that any alert message text we put into our indicator. So that would be like over here. So in order to fill that up, let me go ahead and grab this is a buy signal. So this is the JSON text that we would need from TradersPost in order to send the correct signal over. And it looks like this for the buy entry. A ticker with a ticker placeholder from TradingView. This will be replaced with the ticker of the chart from which the alert is sent. I'm doing a buy action. It is I'm using the closing value and time now, which is not used within trade execution, but is good for notation. I'm copying that for the sell section. And then for the exit, I'm going to remove all this and my action will be exit. Exit here. Does that make sense here, Peter? These are the messages that we would normally send to TradersPost.
Yep, totally.
I click on OK, create the alert. choose this indicator in messages. That's what's going to be replaced. So finally, I have to send a notification to my webhook at TradersPost. I paste that there, click on create, and boom, Bob's your uncle. My alert is set up on the sidebar. Let me just rename this to simple strategy. And now whenever the trade fires, it'll send a signal off to TradersPost to go ahead and buy or sell accordingly. If I wanted to add some bells and whistles, well, I just go into my cursor and do that. If I wanted to add the ability to have direct the direction, I could say direction, long only, have my options for long and short, set up my variables for allow long. So if direction or both, let's add both. Both, okay, so here or both. And then for my buy order, I would set this up so that it is, I would create a buy order specifically. Let's see here. So buy would be equal to this. And allow long, sell would be equal to that. If this is a buy, if this is a sell. I love cursor, Peter. I can't even tell you autocomplete. I don't know, work the visual code and all that sort of thing. No problem. All right. Anyways, so that's how you can set that up in order to have extra features that'll allow you to have long and short.
What did you
if
just
we
add
were
as extra
to
feature?
dive into the chat, over here I added an extra feature where you can choose whether the trade is long or short or both. So here, if I just do short, my buy trades are gone and I only have sell signals that are showing, versus long and long are showing.
Awesome.
And then both as well. So once you have your base, talking with the system makes it way easier for you to go ahead and make different updates and changes and iterate on all that sort of thing. So I'll be posting this for you guys to check it out. But for now, we'll just leave that there. I hope this was fun, interesting for everyone. A little bit of retro, going back to old school PineScript live and on the tightrope. And it's been fun to be here with you.